All right, welcome back, YouTube. My name is MrSchroeter, also known as the King of Navy Federal Credit Union, and you guys are tuned into the best finance channel on YouTube. And today, I'm going to be talking to you guys about, as you probably could guess by the title and what's on the screen, the Navy Federal Credit Union shares secured loan. You know, and talking about their secured loans. I'm going to also get into their certificate secured loan and kind of give you guys, the breakdown on the two, what both of them are, should you get them, what are the advantages and disadvantages of both. Do I recommend one product over the other? All that good stuff. So let's go ahead and get into this. So the shares secured loan. As you can see here, Navy Federal puts on here, secured financing without dipping into your savings and at a lower rate. Now, this is crazy because when Navy Federal says secure financing without dipping into your savings, they actually mean it. So what you're going to do is you're going to put your money up as collateral, but Navy Federal is going to hold those funds until you sign your agreement. Then they're going to give you your money right back. Now, if that's not great enough, then you just wait for me to tell you the next part of this. So again, you're going to put up your money as collateral, right? So, you know, Navy Federal says, hey, we want, $200, right? So you're gonna, or their minimum is $250. So you're gonna give them, hey, here's $250. They're gonna take it. You're gonna sign this agreement and they're gonna hand it right back to you. So boom, you got your money back already. Now what actually happens is now when you pay your bill, so remember the whole bill was $200. So what's going to happen is every month you're going to send them, it's about $43. So you send it to Navy Federal. Within 72 hours, they send it right back to you. So every time you pay them, they pay you right back. So you're just going to keep handing the money to them and they're going to keep handing it right back. Now, what's the catch to this? I'm going to give you guys the catch, and it's a very small catch. If you guys look up at your screen, you're going to see right here, it's going to have terms and APR. This is where your catch always comes in, terms and APR. So what is the catch and how bad is it? So the catch is that two things. One, your term is based upon how much money you initially put up as collateral. So if you put up a vast amount of money, then when you put up a vast amount of money, like how it has on the screen, $25,000, you can get financing out for years, 5 years, 6 years, 7 years of financing, when you're putting up those vast amounts of money, and you can go out way more years, when you're dealing with even larger amounts of money. The smaller amounts of money you may get, 6 months, a year, 4,000 will get you 5 years, which is still a really good, bracket to be in. So kind of check out your brackets and play around with them and see, what is going to be your ballpark. So that's going to be one. Your term is actually determined based upon how much money you put up, and there's not really anything else that's going to factor into your term. Maybe your debt to income ratio, that may stop you depending on how large of a loan you make, because they do have certain guidelines and restrictions as far as how much they can loan to you. Now, the next thing is your APR. How is your APR calculated? It's your share rate plus 3%. So say that your money is sitting in your account and it's gaining 0.01% interest, and then the APR, like I said, it depends on the term. So for most people, you're going to be dealing with less than 25,000. So if you're dealing with less than 25,000, it's going to be 2% interest. So it'll be 0.01 plus 2%. So it'll be 2.01, and then every time you get your dividends, it'll still go to your account, but you'll be paying that interest on this loan, and you'll still actually be getting your dividends to your savings account. So that's just something cool to check out there, and that's one way that you can go about doing it, with securing your loan from funds that are in your savings account. Now, for certain other people, you may use a different method, and this method would be their other secured product for loans, which would be a certificate secured loan, where you can borrow up to 100% of your certificate's principal balance. And again, you're going to be charged 2% interest. So with here, the one thing that's kind of a limitation is, as you can see with the shares, with the savings secured loan, you had the option of going over 60 months if you put up $30,000. With this, you do not have that option. You can only go up to 60 months. As well as here, you have to have a certificate to secure your funds. So your money will actually be, in a sense, locked up, because it will be in that certificate. So that's something else that you want to think about, is where your money's actually going to be. Here you're going to have a little bit more freedom with the share secured loan, the savings secured. Here with the certificate secured loan, your money's going to be locked into that certificate. Your loan term, here's another limitation: it has to be equal or less than the certificate term. So if you have like a 3-month CD or certificate, it's not going to really help you much with getting a certificate loan, because it's not going to add much age to your profile. So that's going to mean that you're going to have your money locked up for an extended period of time to use this method. So there's going to be, there's going to be more downsides to this certificate secured loan, unless you're somebody who can afford to have your money locked up for extensive amounts of time, or maybe you're trying to save for a long-term goal, you know, or something to that extent, and that would allow you to be able to do that. But otherwise, you more than likely you're going to want to go with this share secured loan, just for the freedom that it offers you, in comparison to the certificate secured loan. Both lending products are great. Both products have their downsides and upsides, because again, you can't do a shares loan with a certificate. So Navy's offering this certificate offer to people. It's a great, unique product for people who choose to use it. With that being said, I want to thank you all for watching. Thank you all for tuning in. Don't forget to like, comment, share, and subscribe to the channel. And we will see you all in the next video.